Hello guys, welcome to another session for the weekly market overview with me, Pierre from PAFX. I hope you all had a great trading week as we did in our great room. As you see guys, the offer for the chat room is still open. You can get $10 off if you subscribe to our chat room right now. And for more information, just click the link below the video in the description and it will get you to my site where you have all the information about the courses and the subscription for the chat room. So as usual, we're gonna roll the disclaimer and we start the session with that as always. So please read the disclaimer to know about the risk involved in trading. Everyone should read this. This session is for educational use only and should not be taken as a signal in any way. It's only the way I see the market and the way I will trade it. If you like those sessions, please do hit the like button and support these videos so I can keep doing them every single week for you guys. And feel free to share the stream as well. So next week, as you see, we do have very little major impact news on the calendar. We start Tuesday with US dollar with consumer confidence. Wednesday we do have New Zealand business confidence and USD final GDP quarter in quarter. Crude oil as well. Thursday current account for sterling and GDP month on month for the CAD. We do have some medium impact news as well, guys. Let me put that on the screen. So as you see, there is a lot of medium impact events, so it's not only the red ones. We do have lots of speech, especially on Monday and Tuesday, as you see, FOMC speeches, and it keep going. Even Wednesday we do have another speech and many other medium impact news that you should be looking at before you take your trades to be ready for those news. Yeah, we start with the Dixie on the weekly time frame, and as you see guys, the dollar been going sideways since the start of the year here, looking at this range down here on the weekly, and the look of it right now seems like something as a bearish flag, what I'm seeing right now. But still, we do have a major support that is still holding. And this major support is down here at the 88.25 is the last major low in this chart. If we go down to the daily, you see that we are getting a narrower range since we have these bounces here. The dollar got in a very narrow range, and it seems like we're building up for some kind of breakout right now. So the major support is down here at, as I said, at the 88.50 to 88.25, and what I'm looking at is, of course, if the dollar will reach this level and break it to the downside, or if we're gonna get another bounce to the upside. I am expecting a possible continuation of a ranging market for the dollar till the end of the month, but we can never be sure of that, and we should keep a very good eye on that major support down there. Yeah, so we go down to the 4 hour and we see if we got more details picture of that, and what we have here is that narrower range that I've been talking about. As you see here, the Dixie been ranging inside this box right now, and the bigger range that I talked about in the daily was this one. We still pressured below the 200 moving average on the 4-hour after breaking below this neckline, and now the price is sitting at this minor support or midterm support, as you see. So it is a possible bounce level from here. So keep an eye on this level. It could make a bounce back up here, but I actually think that we may see a break retest and another retest to the downside. That is my own opinion on that. I have a feeling that we're gonna see a possible break of this level now, since did try to break above, reach this high, couldn't do that, and now we're getting inside this narrow range. So this level midterm gonna be very, very important to see if we got any bullish evidence here. Then we may get that bounce at this possible double bottom scenario. We do have some bullish divergence as well, so there is a possibility that we make a bounce, but I personally expecting a possible break and continuation lower to retest these lows back down here. Gold, as you see, guys, let's go to the weekly. Trading view is going a bit crazy here, so do not care about this particular candle here. It's an extra candle. I don't know why it's there, because the week trading week did not open yet. So it did print this candle from nowhere. So we are looking at this candle. This was last week candle if you look at the date below. And as you see, last week was a major bullish engulfing candle on the gold, after making what seems like as a possible correction, still having trouble to break below 1305 here. And last week we got this very good momentum to the upside, showing that the bulls are really defending this level at this area down here. Still a bullish structure. If we go to the daily, once again, forget about this candle. As you see, it is an extra candle. It says that this candle is for the 26th, and we are not there yet. So we are looking at this candle as the Friday candle, and looking at these two bullish candles, you see that the bulls did really defend and did really enter the market at these levels here. Compared with the previous candles, these two are very, very major, and signaling possible continuation higher from this level after breaking this neckline at the 1340 area. There is now not much resistance left until we reach the 1360 up here. If we go to the 4-hour, you see that we had a great trade. We've been in this trade. I am in this trade since down here, and we added to this trade, as I published in over the Telegram and Facebook. We've added after this flag start forming, and we got a very good break to the upside. Now the move seems to be extended on this particular time frame, and it's time to look for a possible correction lower before taking any buys. I think the first level should be the retest of the 1340. This area down here could be your first level to look for a possible long continuation. But let's not forget that we do have now A, B, C, D move that may be completed at this R1, and you may get a deeper correction. In any case, if this deeper correction ended down here at this area, is still good, a possible buying opportunity. As far as we are above 1328, it is still a buy, but it depends how deep we get our correction. If we take a Fibonacci retracement tool for the whole move, if this was our last high and we're gonna start seeing the correction down, you see that the 38.2 happen to be at a good level where we do have a broken structure. And if we measure this last leg only to see if we have any confluence, you see that we do have a Fibonacci cluster down here, the 38.2 of this whole move and 61.8 of this particular leg only happen to be at that same level where we do have a previously broken structure. So two levels. This one is a possible first level, and this one is the best level in my opinion to try to look for a possible long opportunity at. So keep this number in mind. The 1333 to 1334 could be your possible buying opportunity on gold. And as I said, even if we reach the monthly pivot point, will be still looking to probably buy it. But I would much better prefer that we do not trade much lower than 618 at this area down here. Oil, the trend continue higher, and if we go to the weekly, you see now that we do have another breakout of outside of this neckline, and we are about to retest this last high, the high of the year. 66.65-ish area is the major level that we may retest, and that may give us some possible, at least a short-term resistance. As you see, the week closed at the high with almost no selling, no take profit, no nothing. So that usually means that investors think that this will keep going higher. But once again, we are heading toward an important resistance up here, and there is a possibility that we see some rejection, that we see this level defended by the bears that sold this move here. Their stop losses are somewhere in this area, and I am expecting some rejection from this level, at least short term, before we continues higher. So it's not a buy here. The move is extended. As you see on the 4 hour, we do have already bearish divergence on the 4 hour between this high and this high. You see that the RSI is making a lower high here where the price was making a higher high. So the situation is something like this, that we may get a little bit of correction, move higher, test the high, take out the highs a little bit, maybe was a little bit, before we get a possible bounce back down and then a continuation. So I'm still seeing a bullish tendency in this to continue, but keep an eye on the level up here. As I said, 66.65 area is where you may see a possible bounce. As a buy level, I think down here, the neckline 64 area should be, if we get this, then you could try to take a buy from this level down here. 64 level is a good possible first buy level. Aussie CAD. As you may know, guys, Aussie been in a very, very bad situation, and if you look at this move here, 1, 2, 3, 4, 5, 6, 7 days, 7 trading days with very strong bearish momentum without any corrections at all. And now it did reach the monthly pivot point. It did reach the bottom of this ascending channel and start reaching a possible area of trouble. The first area is, of course, if we're gonna see any bounce at the monthly pivot point, but the second level is what will happen when we reach this major flip zone down here, where we do have many times in the past support resistant level, and we do have the 200 daily moving average at that level. RSI is getting to the extreme oversold, so if we do not get a bounce from the bottom of this channel, the next level to look for a possible bounce, at least a short-term bounce, to retest higher is down here at this structure. 0.9870 could be a level where you may see a short-term bounce, but be aware of having a little bit lower take profit, since, as I said, this move been totally controlled by the bears. It was a long time that we see such a major move without any correction. If you look left, we almost never had such a move, but it should be exhausted now, and it's time for some correction higher to the upside. But we want to make business at a good support level, which is, in my opinion, down here at this area. Aussie USD also performing badly for the Aussie against the USD. Despite a little bit of weak US dollar, still the Aussie could not trade higher after this bullish engulfing candle. Thursday and Friday was to the downside as well. We broke previous low here. As you see, we're still making lower lows and lower highs, trading now below the daily 200 moving average, which is a good filter that we may continue to the downside. So still bearish on this move, and soon seems like we're gonna reach this major trend line. As you see, 1, 2, 3 touches, major swing at this trend line, and yeah, selling the rallies should be the scenario here, especially if we break on this lower time frame on the 4-hour. If we break below this neckline, then we may see a retest lower toward, at first, toward the trend line here. And if that broken, then the last level that we may hold as good support is down here. Okay, so still bearish, sell rallies is the idea on Aussie USD. Cat Chief, we've been expecting this to come down, break the low, and maybe test the extreme lows. That didn't happen. We've got now our first higher high, higher than this structure, and our first higher low, which should be an early warning that we may keep going higher from here. Probably do another bounce lower and another higher low, and probably reverse. A little bit early to say that we have a reversal. In my opinion, to call this a possible reversal, we want to see a clear break of this neckline up here above the monthly pivot point. If that happened, then we should be looking for the retest and probably a continuation higher up here. First level to look at if this will happen is, of course, on 4-hour time frame. You're gonna see it clearly that we are now inside this lower range, and we want to see a break above this. Even on this particular time frame, we do have a higher high and higher low, but now we went sideways at the end of last week, but it still is making higher swings. As you see here, this low is much higher than this and this. But to really call a reversal here, we want to see a break of this neckline. This monthly pivot point level here gonna be your signal that this may go higher again. Of course, if that does not happen, you would be looking to see what will happen at the retest. if we get another retest of the monthly S1, if we're gonna get another bounce here, because there is a possibility that we may do some consolidation inside this lower channel before we see a breakout on this one. USDJPY did test that major low that we've been talking about. I've talked about this level in my previous weekly overview, and I told you guys keep an eye on this level. We may see a possible bounce from this extreme low down here, since as we know below that there is almost no structure until we reach these lows and we reach the lows of Trump election down here. So it was a clear level that should be defended, but this bounce did not change the major trend yet. As you see, we're still dealing with lower lows and lower highs. All we have is a bounce. Then Thursday we got a bearish engulfing candle that reversed at this retest area, and Friday was an indecision. So once again, it is still an important level to look at down here if we got another retest. And the reason for that is this bullish divergence, on the RSI. If you look at how major it is, much higher low here compared with this much lower low than this area here. So for next week, keep an eye on this level. If you get another retest of the monthly S1 or down here, and the RSI kept making higher lows at the same time, that could be a another possibility to try to take a buy. It is a counter trend, a major trend to the downside. So you should be careful about your take profit level and have some realistic levels. For our time frame, what happened is we did what looks like as a correction toward 618 of this leg and rejected. So once again, guys, a huge opportunity. If we break below here, then we're gonna be trading to the downside for a long term on this one. But major level did act as support in the past. We should expecting that they may happen once again until we see it broken. And if this got broken, you see the opportunity to the downside is huge. USDJPY, since the break here, we said that nothing left looking at structure wise here until we reach the gap, and if that gap got closed, then we may reach these lows down here. That's what I said. Since we broke this trend line, we've been following and trading this move to the downside. Now last week we kept doing the same, lower lows, lower highs. We did a retest of this possible support level, did hold. Friday could be only profit taking here, but as you see, we keep doing lower lows and lower highs even on this particular time frame, the 4-hour time frame, breaking below monthly S1. So still bearish, and for more downside we want to see a break of this level here, retest, and probably close the gap and even lower. Yeah, those gaps used to act as support as well. This window here, this level may act as support, and when we do the close of the gap may act as at least short-term support. But bearish structure with bullish divergence, so you should be a little bit worried that it may give you another bounce higher from here to retest a higher structure one more time because of this bullish divergence on the RSI. Yeah, But actually, if the break happened, I will not be looking too much at that RSI divergence, cause that means one thing only in my book: no structure means nothing will hold it. It will go through the path with least resistance or support. Euro Aussie weekly time frame show it the best, and that is a break of this high here, which means trend continuation. We broke above this last high, and as you see, market objective could be, as I said last week, that the market objective could be to reach this first level, and the next objective would be testing the extreme highs up here. There is no other signs yet that this will reverse. As you remember, we've been talking about this bearish candle during when this happened, but nothing happened. We traded sideways and then boom to the upside, break, retest, and doing what looks like as a possible continuation. The idea here is to keep buying the lows and buying the dips, sorry, in anticipation to move higher. You see, after this break above the monthly R1, the price went back down, retested that monthly R1, and kept going higher. So the idea here is to keep buying the dips on this anticipation that we break above and continue to those major highs. EuroCAD, we shorted this move, but we didn't get the continuation. We ended up last week, Thursday and Friday, with two hammer doji stars, whatever you want to call them, but it is a rejection, at least indecision, at least, but rejection as well. The biggest wicks are from the downside, so we're not as certain as before that this may continue already, but we did break this inner trend line now, and one should keep looking at a possible retest of the highs once again, probably retest of this structure before give us another bounce to the downside. That would be, if that happened, that would be a possible head and shoulder scenario, but it is a major level and we should not be buying at this level until we break above this structure. If that happened, despite all the RSI at the extremes on the weekly, one could try to keep buying, but as far as we are below this resistance, we should be looking to sell and sell only from these areas. The RSI is making a major divergence as well, and what I'm expecting that we may get another bounce higher now. Give us, if that happen and we get another lower high here, looking for bearish evidence at this level and short it, as it happened here. We got a very good evidence, which was a bearish engulfing day here, and that may be gonna make another divergence on the RSI to the downside. That would be the best scenario to try to sell it from these levels. Euro sterling, we're still channeling inside this channel. As you see, I've had this channel for a while now, and it seems like the channel is holding. We tested the high, now we almost tested the lows before we got a good rejection on Thursday. This is a very strong rejection, as you see, testing this horizontal level as well. So it was not this channel only, we had this possible horizontal support here, tested below that, couldn't hold it, and went all the way back up. We have a close, almost a close above the top of this pin bar, which should be a possible signal that we may see a continuation up from here. So this these three candles are signaling a possible at least a bounce higher from this level, and one could start targeting a possible Fibonacci retracement here. And the first trouble is of course the 38.2 up here, because that happened to be at this neckline as well. But looking at the RSI, been at the extremes and now reversing higher, I think the RSI have some more room to the upside before we see another bounce lower. So the idea is that we want to see the price close above Friday's high and then try to buy the retest from the monthly S1, targeting 50% or monthly pivot point is possible, but first trouble gonna probably be at the 38.2 Fibonacci. 4 hour time frame, you see it more in details what I'm talking about, and that would be something like this: break above the monthly S1, above these highs, and try to buy the retest for a possible continuation higher toward the monthly pivot point from this area. EUR/JPY, as you know guys, I've been talking about a possible continuation lower on this. I did say that last week, and I did publish it on my Facebook and even on my watch list at my site. We never got the break of this level to really see continuation yet, but we got very good retest toward this level. Daily 200 moving average got retested, and this previous structure got rejected again, and Friday was closed back above this level. If last Friday we got a close below this structure, that would be a very good signal that we may keep hitting lower without much correction higher, and probably retest the monthly S1. We were not lucky enough to get that, but it is still possible, because if we look at the 4 hour time frame, you see that on this time frame as well, we broke below this previous low, and we actually broke and closed below this rejection, this pin bar here. Could be some profit taking here on Friday, and the last candle was to the downside as well. So this if you are holding a long if you are holding a short, still there is not much to worry about, and there is a possibility that we do reach this monthly S1. You should start worrying, of course, if you see that we making higher highs, breaking previous highs, and another higher low like this, then you could close your short if you do not like those correction higher. I still see there is a possibility that we reach that monthly S1 despite this indecision day here. If we look at Thursday candle, was a clear signal that this still could be a bearish momentum to the downside. EUR/JPY, EUR/USD, still a very boring one. As I told you guys last week, stay out of it until it make it mind where to go. RSI in the middle, price in the middle of the range, squeezing, and didn't do much. We still have the same level I talked about in the previous overview, and that is a possible retest at the monthly R1 could give us a bounce lower, or if we get another retest toward this low here, that we may get a bounce from that level. Not expecting much yet until we see a break of the monthly R1 and a break of this neckline, then we may test this area up here. To the downside, we want to break this level down here to really say that we may see some momentum to the downside. Okay, but I think there is much better chart to look at until it make its mind, if you don't like to get stuck inside those range. But let me go back to it. If you are like to trade day trading and scalping, as you see, there was some good pivot play. Let me show you some days here. There was some good pivot plays around S1 daily pivot point, as it happened here. R1 did act well as well. So there was some possibilities for short-term trades, but for if you want to hold it longer term, I think you should wait to see those levels broken out first. Sterling CAD, still a very bullish structure. We broke above this high, broke above monthly R2 as well, and this correction is a normal correction after being so overbought, and after such an extended move, it's normal that we do have some corrections. So the first level we should be looking at for a possible trend continuation is of course this broken structure here at the monthly R2. This could be your first bounce level, and the more major one is of course the monthly R1 down here. If we look left, you see that this major resistance may start being support now and bounce from here. So still bullish, no reason to fight it at all, but you may get this, as I said, correction go a little bit deeper, and it is tradable if you like to go counter trend. But if you look at it now at this time frame, we shorted this move actually in the room. We've reached target 1, and we left some position open, but we were looking for target 2 to reach monthly R2 to reverse it. As for now, we do not get that, and it looks more and more like a bullish flag right now. Let me draw that for you. This looks like a possible bullish flag, and if we got the break, especially above this pin bar, then we may see a continuation from this level. But I would gladly see it test the monthly R2. That's because my target 2 is at that level, and it is a better entry level, as you see looking at the structure at this area down here. Good structure. Even better structure is of course down here at the monthly R1. Sterling JPY also keep making higher highs and higher lows on the daily time frame here, but if you look how fast this moved to the downside and compare with the up move, it looks like a possible correction as for now. But since we broke back above 147.50, that changed a little bit my view on it, and I still want to see the price hold inside this if it will continue higher. But the look of the slope of the move and the technicals look of these major candles to the downside, this could be also a possible bear flag that probably gonna get broken to retest the lows or even lower. But play those levels one by one, and you do not need to guess what the market is doing. Now we are back above the 200 daily moving average, but before that, on Thursday, we have a nice retest of this structure here, monthly pivot point, bearish engulfing candle from that level. As you see, these highs and this monthly pivot point did act as a good resistant level, but still we still have higher highs and higher lows, and we should keep looking at this for a possible continuation higher until we see a broke below this low down here. If this happens, if we break below this low here, I think it could be time to test the lows down here or even lower. So keep a good eye at this level down here, 147. Yeah, 147. It's a good support level, and this will change my view if this is a correction only or a possible continuation higher. Sterling USD broke outside of this descending channel, as you see here, that been going inside this very strong ascending channel. Now broke above monthly R1 and got a little bit of rejection, and Friday we closed back above it. Still a bullish structure no matter what time frame we look at. I still see this 200 moving average on the weekly may give it a little bounce lower, but if you look at it like this could be that this pennant or flag is now broken and it should continue even higher. Yeah, looking left, if we break this high, nothing left here until we reach the highs of the Brexit week up here. After this break, now this looks possible. Daily time frame, we're making this nice rounded bottom here, what looks like a possible cup and handle scenario, and any retest of the monthly pivot point could be a possible level to buy, or if we start seeing some consolidation here or a possible bull flag again, then that could be another scenario to buy the break of the flag. New Zealand USD, one more time we got another retest of that support down here. I talked about that level last week. We broke way below it, took out some stops for sure here, but rejected back all the way up above the level, above the 200 daily moving average. We tested as well the monthly pivot point on Friday. So it is still a strong support level, and right now on the 4-hour time frame we do have what looks like as a possible inverted head and shoulder down here, like this one. So it is a clear pattern. This candle here could be position closing end of the week, Friday. Those intraday position closed and possible swing traders closing position here maybe gave this a push to the downside. But if we break above this high here next week, then there is a possibility that we retest these highs one more time. That would be a broken neckline of this head and shoulder here. As for now, it's not broken. We didn't have a close above it, but if that happened, that would be a break of this neckline and a possible continuation after that. I do like to buy the retest of those broken necklines. So if we break above it, I would wait for the retest and try to enter if you're not in a long position already. Otherwise, if this to keep going lower and retest the low, of course you want to look to try to buy this bounce one more time. There is nothing else to do here until we see this low here broken. Then we may start looking for the reversal. As for now, it is still a support level and should be traded as support level. It's not broken. It's violated, but not really broken yet. USD CAD was expecting it to move lower to last week to at least test this low here, this major swing low. That didn't happen. Thursday we got rejection a little bit earlier, but Friday we got another try from the bears to push it lower. The structure is still a bullish structure, making this higher high, and the lows are still higher lows. So there is still a possibility of USD CAD to continue higher, of course, but based on this major bearish candle here, that could be a signal that we do have strong bears that enter the market with a little bit help of the divergence on the RSI. One could see that this may continue lower. As for now, the levels are still support down here. 1.2800 is your support level, and we are now back below this previous resistance, and this as well could be a possible bounce level next week if we test that as first. But if we go down to the 4-hour time frame, you see it more clearly here. The rejection, and not rejection only, we got even bullish divergence on this particular time frame against the bearish divergence in the daily time frame. So that means this possible double bottom here may give this continuation higher to at least retest the structure up here or the monthly R1. So could be continuation from here, but if you see this broken, then we're gonna retest the monthly pivot point down here. That would be another support level that may give you the bounce higher. So many different scenario I'm giving you here, because we have some conflict. We do have bearish divergence on the daily, but we never broke below this structure to really call it a reversal. So structure wise, we are still in a bullish structure, and we should keep our eyes at this possible support level to see if it's gonna break or hold for a continuation. USDJPY broke below the last low here on the daily. Let me show you the weekly, guys. As you see, looking at the weekly time frame, we broke and closed below this swing low here. Did stop and bounced just at monthly S1, but structure wise there is not much of structure looking left until we start reaching the lows. Daily time frame, you see it clearly here. We broke this low here and bounced at the monthly S1. It's still a very bearish structure, and we should keep looking to sell this pair until we start seeing a real reversal with higher highs and higher lows on 4-hour time frame. At least we are below the 200 moving average on the daily, on the 4-hour as well. If we add to that, even if we add the 20, I think we're still trading below that. So there's nothing else here than bears at the moment, and with all that trade war talks and what's going on geopolitically, seems like investors are moving money toward the Japanese yen as a safe haven and gold. And you see that we're gonna take a look at the Dow Jones and stock market, and we see that even those are pushing lower. So still sell the rallies on USDJPY as well. Bitcoins, daily time frame still get rejected at the 200 moving average, just below the 9,000 level. No real momentum right now. We're going sideways. We could not break above the 9,000 once again. I was expecting this to break below, but as you see, the level here did hold as good support. So 7,800 still a good support level after this rejection, but Bitcoins is stuck between 7,800 and 9,000 right now. Still looking heavy to the downside with lower lows and lower highs. And so far we've trading below the 200 daily moving average. I still think this is gonna be the sell level around the 9K. As far as it's not broken, it is a sell, still a sell scenario from these areas. Support down here 7,800, and if this is got broken, then you see that we may reach the 6,000 once again. Dow, we've got great trading opportunities on the Dow the previous 2 weeks, but the last week was really a killer. And you see it was a bloodbath week here. We've moved all the way back down toward this possible support level at the 23,500. Daily time frame, we broke this possible head and shoulder. This neckline is broken. If you look at it like this, now the neckline is broken. We are reaching the 200 daily moving average, and of course this major support now gonna be the level of them all, guys. So keep a very close eye at the 23,000 down here. This is your level, cause if this got broken, you see that there is a big possibility that we see a huge move to the downside. But I think the 23,000 gonna be a major support, and you could start looking for a possible bounce from this level toward the 24,200 at this neckline. That may happen next week. All depends on how badly this trade war keep going, what China would do against the USA, and what Trump tweets or not. So you have to keep a big eye on all those headlines, core. That is the thing that moving the markets right now. And the sentiment right now is fear so far. Some people saying this is opportunity to buy the dips. I don't know. I'm not sure of that. I think we may have a bigger dip this time. Looking at these tries to break higher, couldn't make it. And looking at the size of the bearish candles compared with the bullish candles, sorry, I still see this possible more to the downside. But keep an eye down here. 23,000 is the level, guys, before anything else. So that was the last pair, or the last market we've looked at. As usual, couple of minutes for questions, or you have any charts you want me to look at. I don't see anything in the chat today, so no one did say hi at least, so it's maybe not working. So please, can someone just write something in the chat so I know if it's working? And if you have any questions, so write them in that chat as well. Yeah, as usual, couple of minutes. I will drink some water and get back to you in 30 seconds. Yeah. Good. At least the chat is working today. This is actually the first time I don't see any hi or hello in the chat room. Feels a little bit strange. I was thinking for a while, am I alone here? But then I looked and see that we had the viewer count was a good count. Yeah, guys, I don't see any questions in the chat, so that should mean that we may call it a day, and wish you a great trading week for the next week. One more time, if you do like those sessions, please hit the like button, and yeah, see you out there over Facebook and Telegram and all others channel. Yeah, Zayan, that's right. And I did mention that in the session. So if you did miss that, just go back, reverse the video and watch those too. Thanks a lot, guys, and see you out there. Bye-bye.